All right. Good evening, everyone. Thanks for taking time out on a weekday evening, amidst everyone's busy schedule to join. So we have Shrikant, who's the founder of Hala Mobility. I think a lot of us, who were part of the syndicate in 2024 have definitely seen their pitch. And, a lot of us have invested as well in their equity round in 2024, where we invested at 100 CR valuation. And since then, there's been great growth. There are now 13,000 plus EV fleet across 9 major cities in India. And yeah, last year they closed the year at 97 crore of revenue. And yeah, we have an exciting opportunity for franchisee based investment with an IRR of about 21%. So yeah, a quick summary again. Hala is India's first multimodal EV platform, having software as a service based offering for the fleet management. Yeah, without further ado, I'll hand it over to Shrikant to brief us about Hala and then more about the opportunity that we currently have.
Thank you so much, Rohan. Good evening, everyone. Thank you for taking your time out to understand the product, what we're trying to do here. And I see a couple of at least names who I'm already interacted with, and they're already part of Hala's growth journey. A little bit brief about us. What we do is Hala is a EV as a service platform. We in fact have moved from just EV as a platform to kind of building integrated workforce enablement. The infrastructure that we're building, primarily what we call as seed ecosystem, sustainable ecosystem to empower delivery partners. So why we kind of transitioned into building this ecosystem is in the last 6 years of our journey, we understood that the delivery partner who is coming and picking up the vehicle is not just looking at the vehicle alone. They're looking for much more than that. Say example, person who is moving from Bihar to Hyderabad, Hyderabad to Ahmedabad, Mumbai, or Mumbai to Assam. They're moving for a livelihood, right? And they do not have any safety net. So someone who is moving around is looking for much more than what it is. And so we're trying to plug him with, say, a housing, medical, finance, credit, and a lot of savings activities around it. We're trying to, of course, integrate, not doing everything alone. We're trying to do what we want to, but then at the same time, connect them with the right people so that it becomes more of an ecosystem. And today, we are running more than 13,000 vehicles. In fact, today, as we speak, it's 15,282 vehicles. And yeah, we are on a trajectory to hit 250 plus crores this financial year, and again being profitable with 12 to 14 crore rupees PAT. And one thing I want to also highlight is today it marks an important milestone in Hala's journey. Is in the last 6 months, it's just cash surplus startup, and we are right now terming ourselves as default alive. We really don't need external funds to kind of run the show. We are self-sustained. We are able to add more fleet with our own capital. But again, we can only crawl, we can't run. To be that market leader, to be having presence across multiple cities, then we are looking for a Series A growth as well. So yeah, we with 15,282 fleet, we are currently running in 9 cities, almost at 88% of fleet utilized. And we are one and only cash profitable startup in this particular segment in India, and standing at third position in India today in terms of number of fleet, number of cities, and in terms of revenue. So right now, if you look at it in terms of our fleet expansion strategy, we had four different ways to run. One was our own fleet. We bring in finance vehicles, which are through NBFCs and bankers. We have operating lease wings, which are not on our books, and then we do the franchisee. So right now, what I'm presenting is more of a franchisee network, franchisee operations in terms of expanding our number of fleet and presence in multiple cities. So typically, whenever we go to a franchisee, people have multiple concerns, right? Like, hey, Shrikant, is this another financing of your particular vehicle? Is this return more sustainable? How do I kind of safeguard my capital? It can be 5, 10, 15, 20, whatever lakhs I'm going to invest. And how are these operations going to be streamlined, right? First of all, let me clarify this. This is not a financial product. It's more of an operational infrastructure that we're providing. Like, you think of it like a Uber platform, right? Like you buy vehicles, you onboard it to Uber. There is a demand that comes in, and then the from that demand, whatever the revenue is generated, the rest of the amount is passed on to the franchisee or the vehicle owner side. The same thing is what happens here as well. It is not a financial product, it is more of an operational layer that we are trying to build. And typically, where people get confused is, you are trying to say, hey, I'm taking I'm buying a franchise unit, you're giving me the vehicles, and then you're promising certain return on top of it. Is this kind of a Ponzi scheme, right? Like what we have seen historically with multiple other products. So they try to kind of connect it with that. No, this is primarily there is a enterprise contract that is signed up, like say Zomato, Swiggy, Zepto. They need vehicles, and we have already the signed up contracts with them, and we are already running the fleet with them. So whatever vehicle you procure through the franchisee network, they are already tracked, traced, monitored, controlled. You have a dashboard in terms of which asset belongs to you and where they are running, how much revenue is it being made, and how much service is being done, and then the total revenue out of which how much we are paying to you. There's a clear visibility through the dashboard that we give. So how it typically works, again to clarify, franchise network or franchise partner contributes a capital pool. With that, we purchase the vehicles. Those purchased assets are staying on the franchisee's books, and those vehicles, once they are connected to franchisee books, they are deployed onto Hala Mobility's platform. We then connect it to driver through Hala's application, and whenever the driver books and whenever it is staying at the hub, you'll be able to see it on the platform. And once it is running on the enterprise, we are also able to see how many orders it is being done, how much revenue is it being done. And then once the revenue generation happens, lastly, the revenue distribution happens. Today, these vehicles, whatever we are saying, these will be deployed across Zomato, Zepto, Big Basket, Blinkit, Swiggy's of the world, and those will be tracked, traced, monitor, control through the dashboard. And we have such 45 such business partnerships that are already on board. So in the whole life cycle, we have the investment coming in, the procurement happens, the registration, then we tied up with the insurance. Once the insurance is done, the vehicle comes up with the GPS and the IoT. And once it is done, the tagging of the deployment or the deployment happens on the ground, the revenue generation, right? So when we do all this, there is a chassis number, there's a motor number, there's a control number, which is very unique and specific to those particular vehicle. And these vehicles are allocated to partners. So those also will be able to, you'll be able to track. And then every vehicle that is moving, you'll be able to track those GPS tracks of the particular vehicle, and then who is the insurer, how much of the insurance is claimed, and all the service history of that particular vehicle, and everything is digitally audit trail data will be provided to you. And today, what we have done is more than 15,000 vehicles, more than 85,000 drivers using our particular platform. That's more like 85,000 livelihoods created through this platform. We have run more than 216 million kilometers. We have 95% uptime. 88% is the fleet utilized. 8% is the 8 to 9% is the fleet that is in the RTM state, which means whenever a customer comes, we'll be able to give. We are operational in 9 cities, and we have 45 such businesses who are utilizing our services today. And we also give you a dashboard where you'll be able to see what's your fleet health, what's your revenue, what's your who are the partners who are using it, what's the downtime of your fleet, and total revenue that is generated, and what's the total activity that happened. So again, to go deeper into how the entire thing happens, we first partner. While we do this agreement, there is a back-to-back agreement that happens with the enterprise as well. And then for that, we also will be able to give you how much is the driver earning, how much is the per vehicle earning, and what all operations happen on the platform in terms of how many swaps happen, and how much money is going towards the energy side, how much money is going towards the servicing side. Then out of the net operating surplus, the lease rental is distributed, and lease rental distribution is the last step. And that's where we always say from the day 75, the revenue starts flowing into your account, because the first 30 days to 45 days goes in terms of procurement of the asset, and the next 30 days will go into deployment of that particular vehicle. The revenue generation has to happen, only then the payouts will move out to the franchisee partner. And in terms of your audit trail of that particular asset, you'll be able to track, trace, monitor, control every vehicle. You'll be having insurance, you'll be having IoT, you'll be having operational audit every now and then. You can also look at what happens with that particular vehicle, the entire financial audit, and then a transparent partner level audit in terms of how much orders have been done by that particular driver. So here, instead of you imaginary looking at what is happening with my asset. There is a clear utilizable information in terms of which customer is it used, in terms of damage control, in terms of technology, where, say tomorrow Shrikant doesn't pay to you, although the money is coming, you have a complete control over your asset where you are able to stop that particular asset before us, right? And then the entire information is running on the Circulus infrastructure, which is our proprietary information. And then you are also able to see how the driver attrition happens and how the operations are also going. So every level, there is a clear control, clear visibility of what's happening, so that the franchisee partner is not running in dark, right? Of course, we work in two different ways here. A franchisee who wants to run the operations by themselves on the road, we are still open to it. Or someone who is saying, hey, Shrikant, I just don't want to run into operations. I want a visibility of what's going on, and you run the operations. We are up for the thing. So even that way, we can still work it out. So here, how it is much more different than just a traditional franchise network is every asset is traceable, every asset is registered, they are all live on the Circle OS, the operations are fully managed by us. You'll be able to have the complete analytics of how the vehicle is running, because many of you will have the question saying that, hey, Shrikant, I'm giving the vehicle for 36 months. How do I know if the vehicle is running for that particular month or no? So you'll be able to understand the life of that particular vehicle, and is that particular vehicle revenue generating at that point of time, yes or no? That will be visible. And then performance monitoring of that particular asset in real time can be tracked by the franchise partner through the mobile application only, right? So what happens in this particular overall scheme of things is, on the day one, the franchisee partner gives investment commitment, and in 1 to 45 days the procurement of the vehicle happens, and then from 46 to 75 days the vehicles start deploying, and the 47th day the payout happens. So franchisee partner, the breakup would go in this way. It comes with a minimum ticket size of 15 lakh rupees and 5 lakh rupees of GST, which is 15.75 lakh rupees, and with which 12 vehicles are provided to the franchisee partner. And then there is a AMC cost baked on top of it for the 36 months, and then the telematics server cost is baked in for 36 months. Telematics is one-time cost. The server cost is month-on-month basis. And within the same cost, we are also going to have the spares and buffer stock maintained with us, and on top of it, which the franchisee GST cost. So we always recommend this franchisee is a GST registered, so that they can get this GST benefit back into their account. And once this is done on day 75, the franchisee raises an invoice of lease rental for these vehicles at a 18% GST, and 66,670 is the GST that will be raised, the total invoice that will be raised, and out of which the TDS is deducted and 65,540 is paid back to the franchisee partner. So that way, the entire payout will give a 21% IRR for the overall assets that are running on the platform, and for the 36 months. After 36 months, the vehicles become obsolete, and the vehicles will be completely scrapped off in a way. And if I have to look at the trajectory, it makes in year two and 27th, sorry, on the 27th month is where the break even, the entire money gets recouped. And by the year three, it gives you 1.3836 x of the total investment that is being made by the 36th month, right? And the entire payment schedule is also displayed, and this has been circulated with everyone. If not, we'll be happy to share it again in terms of when the amount would come, when the payments would start, when the break-even point is, and then how the profits start moving into the particular franchise's account. So that's how the entire model has been structured. I'm happy to answer any question that you have in terms of how this model works, and anything beyond this, how Hala is going to safeguard your investment and operations.
Thanks, Shrikant, for the detailed run through and telling us the different mechanics of the company and how the franchisee operates. So yeah, guys, we are now open for questions. Yeah, so that I can moderate this effectively. Like, you can either raise your hand if you want to speak, or you can type it in chat, and we will take it up. So yeah, either of the two should work. Whatever questions you have. Abhir has raised his hand. Yeah, Abhir, allowing you to unmute. Abhir, you can unmute.
Hi. Hi, guys. Can you hear me?
Hi.
Yes, yes.
Yes.
Okay. Very congratulations for the success you've had so far. Very interesting concept. So basically, I want to understand which branded bikes are you all using?
We are basically these are all contract manufactured vehicles, Abir. So these
Okay.
vehicles come from say Esprinto, Jamopai, Amo, or Odyssey. These are the four contract manufacturers where we try to ensure the product will have the same wiring harness, the motors, the controllers, the battery dock and DIUs, so that the battery gets logged and everything is seamless. So these are the four suppliers from where we source our vehicles.
I mean, these are imported or they're Indian manufactured?
I wouldn't say manufactured. I would say these are all assembled.
Assembled.
Yes, yes, yes,
Okay.
yes.
Okay. Okay. So when you say that you will run the operations for us,
Mhm.
uh, everything from say procurement of the vehicles till the time you disburse the money
Mhm.
is run by you, correct?
Yes, yes.
And you
In
will
the
be
very
taking a certain you'll be taking a certain fee for this.
Yeah, so in the operations, whatever the amount is generated, almost 65% is contributed towards the franchise partner and 35% remains with us.
Okay, 35% going with you.
Yeah, so that's where we
Okay,
are committing 5,000 rupees. No, not 5,000 rupees. It is 56,000, 56,500 rupees per 15 lakh rupees of check. So
hmm.
close to around 4,500.
Out of these, you said you had 15,000 bikes, right? Approximately
Correct.
already.
Yeah,
So
yeah.
out of these 15,000 bikes, how many of them are company owned or and how many are franchised as of now?
So 6,500 are the vehicles that are there on my books. Rest of the vehicles are either operating lease vehicles or the franchise networks. So these franchise networks typically are again, family offices, HNIs, ultra HNIs who have got into this FOCO model. So it's
Okay,
proven at
and
scale already.
so it is franchise owned, and what was the earlier other model you said?
Franchise owned company operated FOCO.
No, no, Focus fine.
Yeah,
You said some are 6,500 are on your books,
yeah,
some are FOCO, and there was
yeah.
one more thing you mentioned, company
Operating,
leased.
operating lease. So
So
like
what
say
is that?
company like Astronova, companies like Jantari, they purchase the vehicles on their books. It's more or less a FOCO only, but then they work on a just say operating lease kind of a structure.
Okay, okay,
Yeah.
all right, cool. All right, so I mean, can you share the entire presentation with me if possible?
Yes, Abhir, I think after the call, we'll be sharing recording and presentation.
Okay,
We wanted to
done, done,
make sure the presentation is covered live. We will be sharing
done, done.
presentation as well.
All right. Thank you, Shrikant. All the
Thank you,
best.
Abir.
Thank you. Uh, Manish, allowing you to unmute. Do you want to go next?
Yes, Rohan, thanks. And yeah, hi Shrikant. This is Manish here, and very quick question. I think a part of it already you answered. So just an extension to what you were mentioning about the FOCO model and the lease. In the lease model, is that something which wherein the amount is fixed when the company leases to you, or that amount all is variable?
It's all fixed. Even in the lease model, it's all fixed.
Okay, and in this one, in the FOCO model, also the amount is completely fixed, right?
Yes, 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 yes. Even in
Yeah.
the FOCO model, it
Okay.
is fixed.
So fantastic. So my question is 6,500 you have, and I was looking at some of the numbers which you mentioned, especially with already doing about 100 crores, and with the I'm sure must be a very healthy gross margin and operating profit.
Yeah.
So why would you be wanting to go here now in the same FOCO model, and why not increase your asset base by including procuring more vehicles and making in adding to your books, making it from, like, let's say 6,500 to maybe 10,000, because finally end of the day, the more you add on your vehicle, in the long run the operating profit is going to become healthier for your books itself, right?
Absolutely, absolutely. So if you look at it, I mean, thanks for that, Manish. Like it's not that we are only restricting to this particular model, right? This is one of the four ways that I bring the vehicles on board, right? I'll still
Yeah.
purchase the vehicles with my own capital. I'll still get the vehicles financed. I'll still get the operating lease, and then there's a franchise element. We're not only looking at operating and franchising model only. So it's going to be a combination of both all the four types of products that we have to be there. And the other part is because everything has got a certain limitation, right? Example, I go to a finance model, then every time that I go to a finance, then although my DSCR is great, I may have to stop at a certain point because my debt to equity ratio should not go back. Tomorrow my balance sheet should not look bad, right? So I'll have to leverage more and more of operating lease and franchisee networks. That way I'm not asset heavy and there's no depreciation eating away my profits, right? So I'll have to balance off between all the four, because the journey is not 15,000 units. The journey is going to be a lakh units, so that I can go ring the IPO bell, so that 2031 I should be listed entity.
Agree. Fantastic. And then I have my last question is related to what are the kind of risks attached to in this FOCO model? Are there any kind of headwinds which you think are there where you will not be paid, or you will be paid less in let's say the 36-month period?
Mm-hmm. So again, it is more like example, as I said, Astronova or Gentari, where we are already tied up, where the vehicles are coming to us, right? It is more of that structure only, but it is just we are positioning it as FOCO, and then we are giving it through the business entity only. Right now, whichever entity which is going to do, it's going to be an MSME registered or MSME entity. So whenever an invoice is raised and then there is an agreement, so we are legally and every ways tied up so that the amount has to be paid back to you. One is the agreement back, two is the asset staying with me, and three is the MSME register itself. So they're fully secured in terms of payment, right? Now I'll come on the other side, right? Which is, I would not say risk, but many of them take a step back, which is on the operating side of it, because the insurance is there, because the vehicle is running, and these are run by the gig workers who are, more prone to vandalism and abuse towards the vehicle. A lot of unseen things go on the road, and for which we are already baked in. And from that particular point of view, many of franchise network would say, how do I de-risk myself from this? Right? Say example, there's a vehicle that met with an accident. Do I have to step to a police station for this particular activity? No, because it's operated by us. We step into that particular space, and because we also have certain cut in the entire transaction, we go on the ground, get that particular vehicle out from that particular loop. Now, in terms of risk, see, it's a physical asset. It's not a platform game. So whatever the vehicle has to go through, we kind of do that regular day-to-day operations on the ground. The franchise is not exposed or kind of brought into the limelight to fix those particular things. So that again, we do not link that to any of this payout. So all these terms and conditions will be laid out in the agreements, and I can share the drafts as well for your review. So that way we do not bring the franchise into picture and to kind of solve that. Risks are there, which are again operational side, which a franchise is not exposed, I would say.
Which is perfectly okay, which is understandable. I mean, if somebody is doing that kind of business, they will always have some kind of risks attached. And I'm sure if tomorrow I want to invest, I will have to ascertain and bake in those kind of certain risk elements for that. And okay, now my last one, which is related to a small housekeeping question. Even if it's an individual or it can be a company, whoever wants to engage into contractually can be is possible. It need not be a very specific form of a company like a private limited or a sole proprietor. I think they just need to have a GST number. That's it, right?
Absolutely. So if you look at it, right, like someone who is coming with a 15 lakh rupees check, they really don't need
Yeah.
to be a company as such. They can just be an individual who has their own GST, and then they can have their own current account and start operating. The reason why we suggest
Yeah.
that is they can take the GST benefit out of it, right? If you're an
Yeah.
individual if you're paying 15.75 lakh rupees, you'll not get that benefit of 75,000 rupees you paid on the day one. So that's where we say to claim that GST input back and to kind of get that money out. So through the 18% that I'm going to bill every month on month basis, or you are going to bill in fact to us, is something
Yeah.
you're going to recoup. So that's where we suggest, but again, the choice is on the franchise partner.
Great. Thanks, Srikanth, and
Also,
thanks, Rohan, for
also,
moderating that answer.
also, Manish. So just to
Yeah,
answer one more pointer which I missed is for to
yeah,
a individual who is GST registered till the time they
yeah.
go to a quantum of 15 to 30 lakh rupees also the GST implications will
Uh,
not be there, right? Like so because your annual earning to what the GST slabs are, you'll not fall under that
uh,
till the 30 lakh rupees limit.
30 lakh annually.
30 lakh, no, 30 lakh rupees. Example, you invest 30 lakh rupees, then that means you're
Yeah,
earning monthly almost 1.13 lakh rupees, right? So yearly it's going to
yeah,
be
yeah,
close to 13 lakh rupees odd. So that 13 lakh
yeah.
rupees is below the GST slabs.
Right. Okay. Yeah. Oh, you're referring to the 20 lakh slab. Okay. If you are below
Right,
20
right.
lakhs, anyway,
Correct, correct.
okay. Understood. Yeah. Thanks. That is only provided you do not have any other source of income, because the moment you keep adding up, that automatically by and large will go up. That 20 lakhs bracket will be applicable to everybody.
Absolutely. And the reason also why I suggest to do a kind of a proprietor firm also is that the moment there is a continued revenue for say 6 months, 8 months, 1 year period, right? You will be eligible for getting funds from multiple other sources. Example, right now my existing franchise network, I've connected them with Union Bank, and Union Bank is enabling them with 30 lakh rupees check for individual for each entity. Right. So that also there, if you are able to procure funds for say 11-12%, here you are getting 21. So
Yeah.
arbitrage can be earned there also.
Got it.
Yeah.
Sure. Thanks, Shrikant.
Thank
And
you.
thanks, Rohan.
Yeah.
Thanks, Manish. We'll now quickly move on to Selva and then Swati, and then we'll move on to questions in the chat. Uh, yeah, Selva, allowing you to unmute. Selva, you want to unmute and go ahead?
Yeah, thanks. Good evening, Rohan, and good evening, Srikanth. I hope,
Hi,
hope you
sir.
guys remember me.
Yes, yes.
Why not?
I co-invested with Rohan, and happy to meet you guys today. Thanks, Rohan, for facilitating to co-invest. I'm an early investor. And Srikanth, I'm happy to see you in this position, delighted and thrilled. Third position in India, and marching towards 1 lakh vehicle and an IPO. That really, excites me. All the very best.
Thank you. Thank you.
So, yeah, one question I have. The financial model which you framed, is it frozen or do we have options? Like, for example, you talked about 21%, right, payout as an interest component, correct? So, if do we have an option like instead of investing in a bank, we put the 15 lakhs through this FOCO model, can we opt for saying, hey, pay quarterly interest, right? Instead of, paying along with principal plus interest. I didn't go through the data. The optics says very clearly that it starts after a certain period of time, right? The payout, and then you have a model which talks about principal plus interest. So that's a financial model. Once you share, probably I'll have better questions. But the answer what I'm seeking from you is now, can this be a model where you pay quarterly and say, hey, like an FD. So FD gives you 7% or 8%. If somebody is a senior citizen, probably some banks gives 0.5% more. Is there a better way we can just enjoy the interest and then renew the contract after a year?
Again, that will not work as a lease arrangement, Selva sir. So that's the whole reason, right? Again,
Mm.
it comes under a lot of scrutiny, and then tomorrow I need to be enabling a lot of licenses for myself, and I don't think we
Okay.
are eligible to do all those things.
Oh, okay. That's a constraint.
Yeah. Because I'm
Okay.
not an NBFC, I'll not be able to
Ah,
do those things.
okay.
Also, just
With
to add
vehicles
on
alone.
to it, right?
Ah.
Like Selva, like Shrikant was mentioning, 3 to 3.5 years is the average shelf life of a bike. So for a
Mm.
new investor coming in, it's it's straightforward to track. But someone in the middle of the period, like the whole agreement period, everything changes and just makes it a lot more complex to manage as well.
Mm, mm,
Yeah.
Okay. One more question. So the asset, somebody is asking probably the same question. If that is in an individual name and if the vehicles are registered, it is still a liability, correct? Because from an RTO perspective, if some gig worker hits the vehicle or some illegitimate things he does using the vehicle,
Yeah.
so the registered owner will be the individual in this case, correct? So how that works? Probably you might have taken or you might have factored that risk. I just want to understand how.
So these are non-registered low-speed segment vehicles, sir.
Oh,
Yeah, so these would not be registered on the RTO, but these will be directly sold. I mean, build to and the shipped to model, right? It will be shipped to
okay.
Hala, but built to a particular entity through the
Understood.
OEM. And so that's how
Okay.
the whole mechanism is. So tomorrow, if something happens, they first look at the vehicle number because that number tagging is as per the Hala's number registry, right? Because after tagging the chassis, motor, controller, IMEI number, we give a unique code instead of tracking all those four, right? At that particular code, the police actually first calls Hala.
Okay.
Yeah.
Understood. So build to Hala.
No. Build
So
to build to
to the
franchising, ship to Hala.
ship to Hala.
Yeah.
So the tracking primarily mapped to even if it is RTO to Hala.
Right.
Correct. But
Right.
post investigation, if they find the registered owner is somebody else,
Mm-hmm.
how they handle. I mean, I'm just trying to bring a situation
Yeah.
from my understanding.
No, so I'll give
In
a
India,
very realistic scenario, right? So example, last month only, there was one major accident that happened in Bangalore. Right now,
oh,
the unfortunately, the other side of the person, he has actually passed away. Now, the
okay,
first conversation that happens to us is, hey, who is this? And the vehicle was left on the road, all right. And now the first question that happens is they look at the branding, they look at the vehicle, and then they call us. First thing is, hey, who is this particular driver? Give me the KYC. We give the KYC. Because all that licensing works happen on the road, right? So the police gets the KYC and then, they check for the insurances and everything. And, the entire checklist of what policies are done or no. If everything is aligned, then the insurance claim happens, the FIR files, and then the entire process goes around whatever the policies are there. So the actual
okay,
person will never step on the ground.
okay, got it. Super. So,
Because
what's
we
your
are operating all the questions and all the support has to be coming from Hala to the police, else police would not leave Hala out of the equation.
true. And what's your Shrikant target with respect to deployment of one lakh vehicle? I'm curious to know because
Yeah.
I'm seeing the growth.
Mhm. So if you look at it today we are in Hyderabad around close to 7,000 numbers, in Bangalore around 8,000 numbers, and then in what is this, Mumbai we have around 1,500, Delhi NCR cluster we have around 1,500 numbers. So if you look at it, Hyderabad we can still go for, I can double down here. In Bangalore I can at least 1.5 times I can grow there, at least till 15,000 units I can grow. Mumbai I can double, triple. In fact, I can go 10 folds there, right? Like I have market for 8 to 10,000 numbers. So in the existing cities itself, I can go till the next 15, 20, 30,000, 20,000 units at least, right? After that, we are starting up Pune, Chennai, Coimbatore, Madurai, Tirupati, Kadapa, Kurnool, and then the Trivandrum and Kochi this side, right? So I want to focus more on the South Indian side because again, I'm a firm believer that mobility is more of a local game, right? Like again, we need to know the mindset, we need to know the mentality, the demography, and the user behavior, everything around. So it makes me more confident to kind of run the operations here. Delhi, again, honestly, I'm there only for the sake of presence, not for me to kind of scale or do anything as such. And in terms of going to lakh units also, today, if I speak about, there is a requirement of 2.7 million gig workers to be converted as we speak, 2.7 million gig workers to be converted to electric. Like me, there are 72 other players in India who, collectively are less than 200,000 units. So that means we did not even capture 10% of the market, and 90% of the market is still open. And again, the think tanks of India project that this number 2.7 million is going to go 27 million by 2030, 2035. Right. So when we itself did not capture 10% of the market, so now 90% of the market is still open. And so there's, because the market is so huge, and players like Hala would be thousands of numbers tomorrow, there's no surprise about it. And there's enough pie for everyone to take from this market.
So can I say, but before 2030, this 1 lakh units or much before?
I would say much before, so because this year we're projecting at almost 31,000 vehicles, but in fact, what I have promised my equity investors is only 24,000. So underplay, under promise and over deliver. Again, you are also part of those conversations, so I'll just keep it. So I
And
must
IPO
also,
timeline?
sorry,
Sorry, IPO timeline. I mean,
IPO
that's your
timeline
wish.
by 2031, by at least
Brilliant.
it should be 1,300 crore revenue, 100 crores PAT. That 100 crores PAT also should be growing in such a way that my CAGR of PAT is at least 100% year on year basis. And that's actually we are doing. Previous year, we are at 40 lakh rupees. Last year at 3.6 crores. This year, we should be at 12 to 14 crore rupees PAT. So that way, if I increase 100%, then by the time we are listed, we should at least be able to demand 100x P ratio. Then we should be a 10,000 crore company.
Brilliant. So I know this is today's call is about franchisee. So we started at 100 crores valuation, if as Rohan would say. I'm curious to know what is the current valuation
750 crore pre-money, sir.
today. Okay, brilliant. And I'm done with my questions. Congratulations.
Thank you.
Thanks, Silva. Just for the equity investors, we are currently at a 7.5x upside in 2 years, roughly, but that we'll have conversation for another day. We'll move on to Swati. Swati, allowing you to unmute. Please go ahead.
Hey, hi, Shrikant.
Hi, Swati.
Great presentation. Just a couple of questions. Like in the 36-month long period, like you already have these enterprise clients, like you've logged in the 36-month agreements with them, is it?
No, so any contract will not be for 36 months. The contract will be for 11 months and auto renewal basis. And from past 6 years, I haven't lost any single contract because what there are certain SLAs that we have to adhere, which is again 99% uptime of this particular fleet, whichever we are giving to them has to be running, orders are generated and everything. But the contracts are typically for 11 months period only and auto renewal basis.
Okay. And like the amount that the payouts basically, these are like fixed in the
These
sense
are
that if there's a downtime or there's unutilization of any of the fleet, then
yeah.
also this is
Correct. Even if there is a downside or upside, this is particularly fixed payout that goes to the franchisee.
okay. And at the day 1080, which is basically whatever the end of term, what exactly happens with the assets then? Like you are buying back or
I would say by the end of 36 months, the vehicle is fully depreciated. It needs a full refurb of that particular vehicle, taking it from the chassis, plastics, motors, and everything. So we would say it is just a scrapped out vehicle. Even though we may put, fair market value of that particular vehicle or something, we may get just, probably say $1,000 per vehicle or something as such. We can't define something.
so then again, like you are responsible for scraping it or whatever, right? Like,
Right.
okay. Sure, yeah, I think that's about it. Thank you.
Thanks, Swati. I think Shadab, we've covered your question from the chat as well. Your question was, once the vehicle is scrapped, does the franchisee get any salvage amount? So, like
It's more
Shrikant
or
said,
less zero.
yeah, it's more or less zero. That's what the shelf life is. So that's not factored in. I mean, it's factored that it's at zero in the calculation of 21%
Yeah,
IRR.
correct.
Cool. We'll take up a question from Shikhar and then move to questions in the chat. Shikhar, you want to go next?
Yeah, thank you, Ron. Yeah, thanks, Shrikant. It's good to see the progress. I think we have interacted before. Yeah. So I think most of the questions which I had, I think Swati also asked the same. So just one question. So this 15 lakh investment,
Mhm.
so is it like fixed, like, or it can be more or less
So
also?
every unit is 15 lakh rupees. So it can go in multiples of 15 lakh rupees. So let me also
Okay, and
give
in
a brief
15
of
lakhs,
why we. Yeah, sorry to cut you there. Why we in fact came to this particular number was, in fact, this FOCO model was initially created for self-help groups. right? To create an enterprise, to create an entrepreneur out of them, we created the technology stack, we have the business partnerships, so someone can build up their own particular brick and mortar store and operate on behalf of them. But then later, as we started pitching, and then when we kind of interacted with other family office and everything, this was kind of, they were trying to break their entire investments into multiple categories. One was into equity, one was into fixed, and other one was into the markets and everything. So that's where the interest started, and that's where we kind of shifted the SHG model into the FOCO model. That's the whole history about how we started this.
This 15 lakh, we will be owning like 12 vehicles, right? You mentioned.
Correct. Yeah, yeah, yeah.
Okay. And in the previous slide, about 6.5 lakhs will be like ops and maintenance.
Maintenance cost of that particular vehicle. Telematics and server will be around 1.08 lakh rupees for 36 months. Space and buffer stock would be, I think, 10% to 15% buffer stock would be there. That is going to be costing 0.8 lakhs. This will majorly include few set of tires, few set of motors and controllers for the vehicles to be running and moving and running, and IoT devices, which are one-time cost, plus the connectivity of that particular thing, which includes a SIM card cost also.
Okay. And since we'll be owning this asset for 3 years, right? So we can claim depreciation and all, right? For
Absolutely.
year on
Absolutely.
every year.
Yes. So
Okay.
through Income Tax Act, it will be 40%. Through Companies Act, it would be around 30%, if I'm right, 33%.
Mhm.
So I think related
Okay.
question in the chat, Shrikant, cost of one vehicle would be around 50,000, right? Then
Yes, correct.
yeah.
Okay.
Yeah, Shikhar, any other questions from your side?
No, that's it from me. If there are any questions, I'll reach out to you, Rohan. Thanks.
Sure, sure. Thank you. Uh, yeah, Suyesh, you want to also quickly ask your query?
Yeah, hi. Am I audible?
Yes.
Yeah, sorry, there might be a little bit of background noise. So, yeah, first of all, thanks, Shrikant, for the presentation. I'm also an investor, happy side that sure, I
Your
initiate
voice is
my
very flaky,
presentation
Suyash.
Suyesh, your
about
voice is breaking
uh, 1 second. Is it better now?
Yep.
slightly. Yes.
Yeah, sorry, I'm in a slightly bad network area. So my question is basically I missed the initial first 5 minutes. So my question is, as an investor in this franchisee model and in the FOCO model, can you like quickly summarize on a day-to-day basis what will be some of the operational involvement of this 15 lakh, let's say, what are some of the day-to-day or quarterly or yearly operational involvement of the investor over here? What are some of the things that I would be involved in?
Yeah. So in this entire model, if you look at it, there is no involvement of franchise partner to be coming on the road, or to kind of look into any of the day-to-day operations. Everything is handled by Hala. There is a digital dashboard that will be shared with the franchise partner. They'll be able to track, trace, monitor, control, have any sorts of questions, we can hop on any conversation, any given point of time. And if there is any need be, say example, if the vehicles you see are kind of stacked at one of the hubs, you can come and look at the vehicles at any given point of time. Now, but if the vehicles are deployed to the customer, it's going to be difficult for us to kind of go and look at particular thing. So if the vehicles are stacked up at certain point of time, you are happy to kind of come down, look at the particular assets even before the deployment happened. Example, say 1 to 45 days, when the vehicles come and stack up in one particular city, if you would like to have a pay a visit, that can obviously happen. And if you really want to have some sort of a review, some sort of a conversation, anytime the conversation can happen. There is no fixed timeline as such, because these are owned by you and we are only operating them on the ground for you.
Suyesh, I hope that clarifies.
Yeah, I think that did. Thanks. I just have one follow-up question, Shrikant. Like, can you help me understand like once I own the vehicles, will it be Hala's responsibility to find the customers or the end users for these vehicles, or that will be franchisee owner's responsibility?
Yeah. So irrespective, example, the investment of 15 lakh rupees happened on day zero. 75th day, irrespective that vehicle is consumed or no, Hala will be still entitled to pay 56,500 rupees, and it has to go because you are going to raise an invoice on this particular thing as a lease thing to Hala. And again, as I said, you'll be MSME registered. It is a GST invoice. There's a legal binding contract. So even if there is an upside or a downside, say example, none of the vehicle run, the 56,500 will run. Say those all the vehicles ran, and then there is a Hala is generating 90,000 rupees out of these vehicles. Still, Hala pays you 56,500 rupees only.
Cool. I think he's acknowledged that his query is answered. So yeah, Shadab's question. We'll take up questions in the chat. Shadab's is covered. JR is asking, does the franchisee need to be in the same city since operations is handled by Hala and this is tech driven?
Yeah, so we really don't require the partner to be in one particular city because we are currently operating in 9 cities only, right? Example, say someone who is investing from say Kerala. I'm not even running my operations in Kerala, so that doesn't mean I don't need to have a franchise partner from Kerala. So that's the whole point. It's all completely digitally driven. The visibility is there on the the technology side. It runs as smooth as your WhatsApp on your mobile phone. So you can uh, it can be run from anywhere in the country. Or in fact, for someone who's staying in say the other side of the world, which is in the US or Europe, you can still be part of this particular thing.
Got it. The next question is, what are the cities that Hala has in the radar? So if we can quickly cover the current cities and then
Yeah.
the current
We are
expansion.
currently operational in Delhi, Gurgaon, Noida, Mumbai, Gujarat, sorry, Mumbai, Bangalore, Hyderabad, Vijayawada, Visakhapatnam, Guntur, Elur. These are the cities that were available at the time, or we are running operations. Next up would be Pune, Coimbatore, Chennai, Madurai, Tirupati, Kurnool, Kadapa, Kochi, and Trivandrum. These are the next up cities.
Cool. Good to see all these on your fingertips. Can the franchisee invest more units, multiples of 12, or how does it work? So anything
Yeah,
above
so
12, how many vehicles? Is there a limit, or is it necessarily a multiple, or any number above that works?
it's always a multiple of 15 because per vehicle there is an IoT fix, per vehicle there is a SIM card assigned, per vehicle there is a server cost, right? Per vehicle there needs to be a buffer stock available so that because I will not be able to knock franchisee door every now and then once the space are consumed, right? So the 15 lakh is a unit itself. So it can be a multiple of 15 lakh rupees.
Yeah, so multiple of 15 lakh in money value JR, and in terms of monetary, I mean, yeah, in terms of EV count, multiple of 12. Uh,
Multiple of 12, yes.
Arun's question is, what about breakdown and repairs? I think we've covered it, but if you want to quickly highlight.
Yeah, again, everything is as part of because there's an AMC covered, there's a space already there, and I'm already operating on the road. So all the breakdown spares are available. In fact, if there is anything surplus, whatever surplus is being made, I'll have to redeploy back, and whatever spares are being consumed, those will be, of course, paid by the driver. So again, the replenishment of the stock also happens regularly.
Got it. Next question is from the Play Park. Will the company provide 36-month PDC of 56K?
Uh, Again, till date we haven't done it. It's again a legally bind thing in terms of the agreement as such. To kind of give a comfort that the payments would happen, we can give one undated check for the security side. That shouldn't be challenged. Only for the quantum of 56,500, that can be there. Else I'll have to give 36 checks to everyone.
Got it.
Yeah.
Next question, I think we've covered. Again, Shadab is asking again if 36-month a hard stop or the end of life is extendable.
End of life, honestly, because I've run the fleet for 6 years, I know the entire typical life cycle of that particular asset. Going beyond 36 months is not at all possible. If not me, tomorrow, if someone promises, please be aware.
Got it. Next question is by Abhir. How is Hala different from the other 72 partners in terms of pricing of contract?
Yeah.
with vendors and also the FOCO model?
So if you look at the market dynamics and us, right, we are one of the costliest rental charging platform in India today, right? And that's why we are profitable, and where these profits are going also in terms of operational cost, right? I have my customer is able to get a service point at any given point of time within the 5 to 8 kilometer radius. He has a service center available. There's an RSA guy always available on the ground. Customer support channels always available. There's a point of contact for just like your relationship managers in the bank. We have one field coordinator who coordinates with 50 vehicles. So all this kind of network is being created. Only then the customer is happy. He's able to generate more amount, and that's why he's able to pay us this kind of a premium. So that is one way we are trying to safeguard that. For us, customer wins, then only we win. And for us, the driver has to win. And for that driver to win, we kind of give them every lever possible. It can be in terms of field coordinator, customer support, RSA, the service centers on the ground, that makes him have the touch point at any given point of time. He's not left in the dark, right? So that makes us different in terms of charging the rental. That's what I answered. But in terms of how we are different from the competitors or anyone, I would say competitor will also do the same thing. We will also do the same thing. It is only the who is the efficient guy in the system, right? Who is financially disciplined, who is operational disciplined, who is ensuring that vehicle is running, and who is able to kind of maintain that vehicle's uptime is maintained on the ground. So that makes the whole difference. Other than that, last mile delivery, vehicle operations, everything remains same. There's no differentiation as such. If you ask me what is difference between Zip and me, there's nothing. But I'm an efficient Zip when compared to them, right? One metric is I raised only 21 crore rupees of equity till date, and I'm at 97 crores, and I'm tracking towards 250 crore rupees of revenue, which is 10 times 1 rupee invested. I'm able to do 10 rupees outcome. While if I have to not name the competitor, but just the other competitors who have raised, say, 400 crores, and they are today at 400 crore revenue, right? For every rupee, they're generating only 1 rupee. So that's the efficiency gain.
Well summarized, Shrikant. I think Manish, we've answered your question. Cost of one vehicle, I think he showed the breakup. It's roughly 50,000 rupees.
50,000 rupees. In fact, it is 49,999. Yeah.
Next question from JR, as a follow-up to his previous question, is if depreciation is in the books of franchisee, then effective IRR would be higher. Am I right in this assumption?
Absolutely right. Absolutely right. This is without the IRR is a absolute calculation of the cash flow, not with the intangible benefit that you're getting. Example, you'll get the depreciation benefit, which again translates to your income tax that you're not going to pay at all. So that will in fact increase your IRR. That's why, in fact, I've told there is another model which the entities are doing, right? Operating lease model. Why they kind of want the vehicles to be on their books is, again, they get the depreciation benefit, they claim the income tax benefits there, and they also have the GST benefit. So all these things are there.
Got it. Yeah, JR's follow-up is, can the franchisee cut a 15 lakh check after 36 months and continue the business, or entire life cycle for franchisees 36 months?
So
That would be a new set of vehicles, right?
yeah, it will be new set of vehicles. In fact, I have franchisee units, example, because almost 60% of my 65% of my fleet is through the franchise network, right? The franchisees would still keep on doing it every 3 months, every 4 months. In fact, if I have to say how the family offices run is, they put a check of 5 crores in the initial month itself. That 5 crores will give them say for after every 3 months, every 6 months, they collect that money, they redeploy the money back. So it's just a compounding that they're doing with their capital.
Got it. Next question is from Binin. We have seen Exa Mobility went bust and investors lost the money. God forbidden how Hala will ensure it will not become another case. Not sure how Exa lost its track, as they are not responding officially except for periodic intimations on irregular underlying receivables.
Correct. So again, that's where the first slide actually started with, because whenever we, in fact, as I said, this particular product was made for SHGs to kind of open up a brick and mortar store. Then when we opened up it for multiple other investors, when we were doing the equity raise, that's where the HNIs and the family offices kind of showed the interest, right? So I would not comment on any company. They may have their own set of journey. I would not put any batches or tags to anyone, but then again, the name was taken. it boils down to how your capital is being utilized, right? If I'm actually creating a illusionary asset, then it's a fraud, right? But here the asset is procured. There is an asset that is being dispatched by the manufacturing unit to our facility. There is an e-way bill. There is an asset being tracked. There is a tracing mechanism and everything. So the it's not a Ponzi scheme. It is not kind of a illusionary method that is being created. So after looking at historically what has happened in the industry, we kind of took every safeguarding mechanism so that the trust is being built, because we're not talking about 15,000 units now, right? We're talking about a lakh units. The journey is bigger, the journey is longer, and it's all matter of how well disciplined you are to kind of give that kind of an outcome. So again, for a franchisee, whatever ways we can safeguard the trust and confidence, we are up for the game.
Got it. I think we have a repeat question from Arun. So after paying 15 lakhs capital, when is this amount returned? So Arun, to summarize, Shrikant covered that the shelf life of the vehicle is 3 years, and you are getting rentals over the 3 years, and that is what breaks even. I think at the 27th month, as he covered, and then it's a 1.3x over 36 months. But on an IRR perspective, since you are getting money at the end of each month for 36 months, it is a 21% IRR. But Shrikant, you can add to that.
Yeah, I think that's what it is. So in a nutshell, the return looks like 1.36x of total investment done, but because there is a principal component also coming back every month on month basis or till the 27th month, so overall that accumulates to 21% IRR.
Cool. I think we've taken all the questions in both the chat and uh, over whoever raised their hand. I'm allowing everyone to unmute themselves. So if anyone has any final question, feel free to unmute and ask, so that it would remain structured. I hadn't done that so far, but anyone who has any final question, please go ahead, unmute, and you can ask. Also, I've shared the intent form in the chat. I've already had few folks fill it. So whoever is interested in participating in this interesting opportunity of the franchisee based ownership, where the company Hala takes care of the operations and we as an investor purely invest and get good returns, which is 21%. Yeah, do fill the form if that's of interest. Cool. I guess we are done with all the questions. So yeah, thanks a lot, Shrikant, for your time, and thank you everyone for joining. I will share the recording shortly with everyone.
Yeah, thank you everyone for joining the call.